Protocol called Wormhole just integrated with the XRP ledger, and frankly, most people are sleeping on what this actually means. We're not talking about a pointless bridge here. We're focusing on top-tier infrastructure that's going to help traditional finance enter crypto. And by the end of this video, you're going to understand exactly why this integration could be one of the most important developments for XRP holders. So let's start with what actually happened. Ripple announced that the interoperability network Wormhole has officially integrated with both the XRP ledger mainnet and something called the XRP Ledger EVM sidechain, which was developed by a company called Persist. And I know that sounds technical, but here's why it matters. Wormhole already handles billions of dollars in cross-chain transactions. That's real institutional money moving between blockchains every single day. And they just connected the XRP Ledger to over 35 other major blockchain networks, including Ethereum, Solana, and Avalanche. But this isn't really just about moving tokens around. It's that major financial institutions like Apollo and BR, I can't say their company name because the algorithm flags it even if it's something good, but it's the company that Larry Fink has something to do with, are already using Wormhole to deploy billions of dollars in tokenized assets. We're talking about real Wall Street money flowing through this infrastructure every single day. So what exactly is Wormhole? Well, imagine that you have money in a bank account and you want to send it to someone who banks with a completely different institution. In the traditional world, those banks have to communicate through networks like Swift to make that transaction happen. Wormhole does the same thing, but for blockchain networks. It's a messaging protocol, and it allows different blockchain networks to talk to each other. That way they can securely transfer assets and messages between them. And here's how it works. Wormhole uses something called a Guardian network, and these are 19 professionally operated validators. To send tokens from Ethereum to Solana, Guardian nodes go and check the transactions on the source chain. Then they process equivalent tokens on the destination chain. But here's what makes Wormhole stand out. It's not just for moving tokens. It enables cross-chain messaging, which means that smart contracts on different blockchains can actually talk to each other. And that opens up possibilities that a lot of people hadn't even thought about yet. Now, Wormhole's been around since 2020, and they've processed well over $60 billion in total volume across more than 200 applications. But what's really caught the attention of big institutions was their track record. And before the fudsters get in the comments, yeah, Wormhole had a major hack back in 2022, and during that incident there was like $325 million that got stolen. However, they fully repaid their users, rebuilt their security infrastructure, and since then they've had zero incidents. And that kind of reliability is why companies like BR and Apollo chose Wormhole as their interoperability partner for moving billions of dollars in tokenized assets across a whole bunch of blockchains. And this is where it gets really interesting for XRP holders. Wormhole isn't just connecting to the regular XRP ledger. They're also integrating to the XRPL EVM sidechain. You can think of this sidechain as a parallel to the XRP ledger that speaks Ethereum's native language. The regular XRP ledger is incredibly fast and cheap for payments, but it can't run complex smart contracts like Ethereum can. And the EVM sidechain solves that problem. Persist built this with something called the EVM OS software stack that's built on the Cosmos SDK, or software development kit. And if that sounds like a whole bunch of alphabet soup, just know this. It means that sidechains can run any smart contract that works on Ethereum, but with the XRP ledger's speed and cost advantage. Anyway, Wormhole's platform supports over 200 apps on the networks that it supports, and now XRP ledger developers can transfer XRP, IOUs, and new multi-purpose tokens, or MPTs, to and from chains. And additionally, developers can interact with smart contracts outside the XRPL by triggering messages and data between networks. And what's really encouraging is the adoption numbers. The testnet just launched back in March of 25, and they've already onboarded 87 new entities. And most of them have no prior XRP involvement. That's not just existing XRP holders moving over, that's genuine ecosystem expansion. And so what does all that actually enable? First, cross-chain DeFi. Right now, if you hold XRP and want to use it in a DeFi protocol, you're pretty limited. With the Wormhole integration, XRP holders can now access liquidity pools, lending protocols, and yield farming. That opens doors across Ethereum, Solana, Avalanche, and 32 other networks. So imagine if someone could take XRP and use Wormhole to bridge to Solana. Then they could provide liquidity to a lending protocol and earn yield. And finally, they could bridge back to the XRP ledger, all while still maintaining XRP exposure. Second, real-world asset integration. And that's where things can get really interesting. Companies like Securitize are already tokenizing billions of dollars in real-world assets like private credit funds and other treasury bills on other networks. With Wormhole, these tokenized assets can now flow seamlessly into the XRP ledger. Think about a pension fund that could hold tokenized real estate on Ethereum and then trade it for XRP on the mainnet, and then use that XRP for instant cross-border payments. That's the kind of utility that drives long-term demand. Third, multi-chain applications. Developers can now create apps that work across different blockchains. They can use the XRP ledger for payments, Ethereum for smart contracts, and Solana for high frequency trading. All those are connected through Wormhole's messaging protocol. And here's the institutional play. Ripple's been focused on bank partnerships for years, but most banks want to experiment with different blockchain networks. With Wormhole's integration, banks can start with the XRP ledger for payments, but then gradually expand into DeFi, tokenized assets, and other blockchain use cases without rebuilding their entire infrastructure. The ecosystems that the XRP ledger is now connected to include Ethereum, Solana, Avalanche, Polygon, BNB, Arbitrum, and about 30 others. And that's access to hundreds of billions in value and millions of users who previously had no easy way to interact with XRP. And so let's talk about who's actually using this infrastructure, because the enterprise adoption is pretty wild. BR's Biddle Fund has grown to well over $600 million and operates across 7 different blockchains. They're paying dividends daily and settling trades in minutes instead of days, and that's not a pilot program, it's full production deployment of institutional grade infrastructure. And Apollo's even got more impressive numbers. They've already tokenized their $1.3 billion diversified credit fund, which generated 11.7% returns back in 24. And through Wormhole, qualified investors can now access private credit markets that were previously only available to ultra high net worth individuals and trade those positions 24/7. Securitize serves as the interoperability partner for all of this. They're an SEC registered broker-dealer working with Hamilton Lane, KKR, BR, and Apollo. And we're talking about 4 of the most sophisticated asset managers in the world, and they've all chosen Wormhole as their cross-chain infrastructure. So how does Wormhole make money from all this, and what drives the value of their W token? Well, the W token serves 3 main purposes: governance, staking, and ecosystem incentives. Holders can stake their tokens to participate in network governance and earn rewards from protocol fees. And as more institutions use Wormhole, more fees flow to token holders. But here's the really interesting part. The W token is trading at around 6 cents with a market cap of just over $300 million. But Wormhole raised money at a $2.5 billion private valuation. That suggests that the token might be trading at a massive discount to what sophisticated investors think it's worth. The tokenomics support that thesis. Only 4.6 billion tokens are currently circulating out of the 10 billion token total supply, with the rest locked up for 4 years. And as institutional usage grows and more tokens get staked for governance, the available supply actually decreases while demand increases. And so what could drive price appreciation for W? Well, there's several things. Increased institutional adoption that requires more governance participation, higher protocol fees from growing transaction volume, and then scarcity as more tokens get locked up in staking contracts. And when you look at competitors, Wormhole's pretty favored. And so let's get a bit more technical for those who want to understand how this actually works under the hood. Wormhole uses what's called a lock and mint mechanism. When you want to bridge tokens from one chain to another, the original tokens get locked in a smart contract on the source chain. The Guardian network verifies that, and then the equivalent tokens get put on the destination chain. For the XRP ledger integration specifically, Wormhole connects to both the mainnet and the EVM sidechain. The mainnet integration enables direct asset transfers and messaging, while the sidechain integration enables smart contract interactions. The security model relies on those 19 guardians reaching consensus. For a transaction to be processed, at least 13 of the 19 guardians need to agree. And that creates a pretty strong security model that's proven itself with billions of dollars in transaction volume. And what's great about the XRP Ledger EVM sidechain is how it maintains compatibility with both ecosystems. Developers can use familiar Ethereum tools like MetaMask, Hardhat, and Remix, but transactions settle on the XRP Ledger infrastructure. And so there's several catalysts that could drive massive adoption here. The XLS 38 amendment is working its way through the XRP Ledger governance system. And that would enable native cross-chain capabilities without external bridges. Currently, it has about 31% validator support and needs to get over 80% to activate. Central bank digital currency development is another huge opportunity here. And with 134 countries exploring CBDCs and 13 in pilot stages, interoperability between different digital currencies becomes really important. And Wormhole's proven ability to handle institutional scale volume positions it perfectly for government partnerships. The regulatory environment is also improving. In the US, regulators are focused on clear frameworks rather than enforcement-only actions. And in Europe, MiCA provides clarity for compliant protocols. And the XRP Ledger already launched the first MiCA-compliant Euro stablecoin, showing how regulatory leadership creates a lot of competitive advantages. So here's the bottom line. Wormhole's XRP Ledger integration is institutional validation of multi-chain infrastructure as the foundation of the next generation of finance. And for XRP holders, this opens up access to the entire multi-chain ecosystem while maintaining XRP's core advantages in payments and settlement. You're no longer limited to the lack of DeFi that exists on the XRP Ledger. You can access the liquidity and applications across 35 other networks. And so for crypto investors more broadly, Wormhole represents one of the few protocols with proven institutional adoption that's trading at what I believe is a significant discount to private market valuations, and it's positioned right at the center of everything that's happening in tokenized assets. And with everything coming together for regulatory clarity, institutional adoption, and technical maturity, we're seeing a rare alignment that could drive some sustainable and big growth for both protocols. But remember, this is still the early stages in the infrastructure and integration, and we're still in a volatile market. But that being said, if you believe that the future of finance involves tokenized assets moving seamlessly across multiple blockchain networks, then understanding Wormhole and its integration with the XRP ledger is pretty important for navigating what's coming next. The infrastructure is being built right now, institutions are deploying capital, and the network effects are just beginning to compound. And so it's kind of a foregone conclusion that multi-chain finance is the future, but the real question is whether you're positioned to benefit from it. So what do you think? Are you bullish on cross-chain infrastructure? Well, if this helped you understand the technical and investment implications, hit the subscribe button for some more. See you later.